Hello and good morning, everyone. Thank you for joining another episode of the Market Snapshot series. My name is Rufus Kamau, Markets Analyst at FXPesa. So today we'll be talking about a couple of things. I would like to start with congratulations. Gold has finally hit $4,000 and above. I believe it has been more of a bull year since the year started. Also, we have seen some crazy runs happening in currencies, equities, and we are going to be diving through all that. So as usual, this session does not constitute of any form of investment advice. It's not a recommendation to trade, so you should always do your own due diligence. So once you join in, can just say hi in the live comment section. These will confirm that everything is working just fine. So let's get started with the economic calendar. We all know the calendar has been slow since the US government officially went into a shutdown, meaning that we'll be receiving reduced economic reports. So mainly we'll be focusing on other reports from other countries. So for the US side, we continue following on the shutdown and how soon it's going to get resolved. Can see Musioki in the house. Hi to you too. I can see Derek in the house. Good to see you in the house too. Hello, Johnny. Thank you for joining. Can see Maureen tuned in from Mombasa. Welcome, Karibu Sana. Let's get things started. So first things first, on the calendar, we had an event happening early this morning. And this was an interest rate decision by the Reserve Bank of New Zealand, where the central bank delivered a bigger than expected rate cut of 50 basis points. So the market was anticipating a 25 basis point cut from 3% to 2.75%. But then we got a 50 basis point, which took the official interest rates to 2.5%. So cutting rates is usually negative for the currency. So in this case, as the Reserve Bank of New Zealand continues cutting rates, we also see the New Zealand dollar taking a step backwards, even though the dollar has been pretty strong since last week. So going on for the rest of the day, we'll be expecting FPC meeting minutes as well as the FPC statement from the UK. And then from there, we are going to have a couple of speeches from Fed members, ranging from Musalem at 4:20, Barr at 4:30, Goolsbee at 5 p.m., and then Logan at 8:15 p.m. We'll be getting the FOMC meeting minutes at 9 p.m. And finally, the FOMC member Kashkari will be speaking at 10:15 p.m. So clearly, this will be US market dominated by Fed speakers. And of course, we know that all of them currently are flying blind, meaning that they don't have the economic reports that they need to make an informed decision on monetary policy later this month. So other than from the US side, we'll be getting the US crude oil inventories. And in this case, we're expecting a 0.4 million barrels increase in the past week. And this is a slowdown from the prior 1.8 million barrels. So the more we see scarcity in oil, the higher the oil prices go. But then let's say there is a big increase in crude oil inventories, then that would mean that there is plenty of oil in the stocks, and as a result, we will be expecting much weaker prices. So going forward for the rest of the day, that's the key focus. So yes, there will be also an MPC member, Peel, speaking at 6 p.m. That's from the UK side. So if you want to enjoy having updates on what's happening, kindly follow the speeches as they happen today. So for those who are in our Telegram group with Bullish Banter, I'll be sharing updates for each speech. So make sure that you join the podcast. The Bullish Banter podcast Telegram community. I'll be dropping a link in the comment section. So whenever you're free, you can check it out, where we continue with such conversations. So that being said, there are other things happening in the markets. I'll be showing you some of the key highlights. So one, there's even more trouble in France as Macron faces call to resign over crisis. So if you dive deeper into the whole story, uh, the intervention by Edouard Philippe, Macron's longest-serving prime minister from 2017 to 2020, and who now leads an allied political party, came as frustration grew within the president's own camp over the biggest domestic political crisis of his 8 years in office. So Prime Minister Sébastien Lecornu, appointed less than a month ago, stepped down on Monday morning after failing to rally support across the center-right coalition for his new government, which is only supported by a minority in parliament. Macron ordered him to make a last-ditch effort to rally support for a coalition government, but there was no sign of progress, with the far-right refusing to even attend a meeting. So France's next presidential elections are scheduled to take place in 2027. They are seen as a historic crossroads in French politics, with the French far-right under Marine Le Pen sensing its best chance yet of taking power. So Macron is constitutionally barred from seeking a third mandate. Philippe, who has already declared he will stand, said the polls should be held early once a budget is passed. In comments, Le Parisien daily described as political bomb. So it's an evolving situation happening in France. We'll be following closely, and we know that the situation has the potential to impact the French stock market index, and of course have some impact on the euro. So other than that, there's also the news about Japan. So yen falls may prod the Bank of Japan to hike rates in October, ex-central bank executive says. So I'm sure if you've been trading from last week, then you have seen the weakness happening in the yen and the strength in the Japanese stock market. And this is as a result of the political situation happening in Japan. So I'll be looking for more context on this. So just give me a sec. So next steps to confirm Takaichi as Japan's new prime minister. So Japan's ruling Liberal Democratic Party picked hardline conservative Sanae Takaichi as its head on Saturday, putting her on course to become the country's first female prime minister. So for most of the post-war period, the pick for LDP president was a shoe-in for the premiership because it held the majority in parliament, either on its own or with a coalition partner. The LDP-led coalition lost its majority in both houses of parliament in elections over the past year, but the party remains the biggest in the more powerful lower chamber, meaning Takaichi's chances of becoming the premier are almost certain. So with Takaichi becoming president, the market is mainly focused on her economic policies. So what is her economic policies? We look at yet another article. Japan's bond vigilantes brace for loser fiscal stance after Sanae Takaichi wins party vote. So she has been a long-term supporter of Abenomics. These were the economics practiced by Shinzo Abe, the former PM. So Japan's government bond market, long shielded by the Bank of Japan's yield curve control, and decades of deflation, faces a test of faith under Sanae Takaichi, who is set to become the country's first female prime minister. Markets are betting that Takaichi, who won the race to lead Japan's ruling Democratic Party on Saturday, will blend a pro-growth, fiscally active agenda with a still dovish central bank, a mix that threatens to push long-term yields higher and steepen the Japanese government bond curve. The parliament is expected to confirm the hardline conservative as prime minister on 15th of October. That should be next week. Takaichi is seen as a proponent of Abenomics, the economic strategy of the late Prime Minister Shinzo Abe, which touted fiscal spending, loose monetary policy, and structural reforms. Goldman Sachs said that Takaichi's win presents upside risks to long-end Japanese government bond yields, calling a 10 to 15 basis point pop in 30-year yields a possible first step. The bank's analyst added that long-term Japanese government bonds have been decoupled from cyclical anchors such as inflation or economic growth this year and could remain elevated as investors price the risk of looser fiscal policy and a slower Bank of Japan hiking cycle. So, what the article is basically saying is that there is a likelihood that she will not be following the current monetary policy, which recently we have seen the Bank of Japan hiking interest rates. So, for her, she will most likely be looking to soften policy, and this means keeping interest rates low and printing a boatload of Japanese yen. So that can only mean one thing. If she's expected to print out of cash to ease monetary policy, then as a result, you could be seeing the Japanese yen weakening against other currencies. So on the reverse side, the stock market benefits from this. So that's why we can see the Nikkei 225 index bracing even newer highs. So other than that, now looking at other key highlights in the markets this morning, one is gold tops $4,000. That's something we have been following closely. European stocks cautious, but in the last 1 or 2 hours, they have been pretty bullish. Sweden inflation slows to 0.9% in September. German industrial output falls the most in over 3 years. Dollar hits 2-month high on safe haven demand. Brent rises on OPEC Plus output cap, and Reserve Bank of New Zealand delivers oversized 50 basis point rate cut. So those are the key highlights as of the trading economics page. And now diving deeper into gold. Gold surpassed $4,000 per ounce on Wednesday, that's this morning, reaching a fresh milestone as investors fled to safety amid global economic uncertainties and a dovish Federal Reserve outlook. The US government shutdown, now in its second week, has delayed key economic data, complicating assessments of the country's economic health. Despite this uncertainty, traders are pricing in a 25 basis point rate cut in October and December. Meanwhile, ongoing political turmoil in France and a recent leadership change in Japan are adding further layers of uncertainty for global markets. Gold has surged more than 50% this year, driven by trade tensions, geopolitical unrest, and a softer US dollar. Central banks have also remained active buyers, while last month's Fed rate cut further boosted inflows into gold-backed ETFs, with bullion-backed ETFs recording their largest monthly inflow in more than 3 years in September. So clearly, we expect the bull market in gold to continue, currently trading at $4,039 per ounce of gold. So on the New Zealand side, the Reserve Bank of New Zealand lowered its official cash rate by 50 basis points to 2.5% at its October 2025 meeting. That was early this morning. A larger than expected move compared with the anticipated 25 basis point rate cut, bringing borrowing costs to their lowest level since mid-2022. Policymakers cited prolonged spare capacity, subdued domestic activity, and downside risks from cautious household and business behavior, which could slow the economic recovery, prompting a stronger easing. Inflation also remains near the top of the 1 to 3% target range, but is expected to return to 2% midpoint by mid next year as tradables pressures ease. Headline inflation is estimated at 3% in Q3, driven by higher administered prices, food costs, and tradable goods, though underlying non-tradables, inflation continues to moderate. Economic activity remained weak due to supply constraints and global policy uncertainty, while consumption is gradually recovering. The committee remains open to further easing to anchor inflation near the 2% target, which means that they haven't closed the books yet. And the Reserve Bank of New Zealand may even implement another rate cut, and that basically points to a much weaker New Zealand dollar. So comparing the performance of the New Zealand dollar and the USD, these mixed signals, because as of this morning, it seems like the DXY is beginning to weaken a bit, and the New Zealand dollar is also weakening. So that means if we are looking for a pairing, then it makes more sense to be looking for a pairing outside New Zealand dollar USD. So if you look at the performance of currencies as of this morning, you'd notice that the New Zealand dollar has been the weakest. However, if you're looking to pair it with another currency, I would prefer a much stronger currency than the dollar. So in this case, the pound sets itself apart. So pound New Zealand would be a much better pairing compared to New Zealand USD. So that's the performance as of this morning. And so far, since the week started, the Japanese yen is still the weakest currency, and we have already discussed why. Whereas the dollar has been the biggest gainer, no other major currency has gained against the USD. So this means that if you're looking for a weak currency to be trading, that's most likely the Japanese yen, closely followed by the New Zealand dollar. So on the bullish side, the dollar has been the biggest gainer, but I would be a proponent of the pound as well as the Canadian dollar, less from the USD side. So those are the updates as of this morning. And now looking at the SP 500 and how it closed yesterday, you'd notice that most of the major stocks were losing. With Tesla down 4.45%, we had Oracle down to 2.52%, Apple slightly lower, 0.08%, Google 1.74%. So clearly quite a red day, which indicated some form of panic selling, with the most affected sector being the semiconductor sector. You can see on average they were down 5%, Applied Materials down 5.52%, Lam Research Group 5.9%, Applied Materials 5.52%, KRA Corp 4.82%, and so on. So clearly you can see this was a panic selling day. We're hoping that the panic will ease into today. So closely watching the SP 500, the Dow Jones, as well as the Nasdaq index. So on the crypto side, it is a pretty bullish day. So with Bitcoin up 0.33%, ETH 0.57%, XRP 0.5%, Solana 1.39%, and BNB leading the charge with 3.01%. So it's safe to say that it's a green day. So on the futures side, some of the best performances of this morning are basically the precious metals, with palladium leading the charts with 4.27%. Silver is up 2.2%, platinum 2.04%, copper 0.35%, and gold 1.37%. So oil futures are also on the rise, with the exemption of ethanol, which is down 2.51%. But then the others ranging from WTI, which is short for US oil, being up, crude oil is up, natural gas is up, gasoline and heating oil are also up as of this morning. So agricultural commodities are not doing well, with orange juice leading the losing side, down 5.85%, lumber 2.52%, cocoa down 2.18%, and coffee, sugar, and cotton having the slightest of losses as of this morning. So now I believe it's time we jump straight into some technical analysis and try to understand what could be happening next. So sorry, I realized I wasn't sharing this. So I'll just slightly bring you back to the chart. So as I mentioned, the metals are the best performing sector in the futures markets, closely followed by oil. Energy sector is also doing really well. Soft commodities are mostly on the losing side, and that's the key highlight I didn't show. So when I was showing the crypto side, you can see it's a green day. Most of the top cryptos are up, with BNB reading the chart with a 3.06% gain. So apologies, wasn't realizing I wasn't sharing that. So that being said, let's get into the favorite part of the presentation. And this is where we do some technical analysis. So I'm hoping everyone can see my screen. This is a MetaTrader 5 trading application. It's the app that we mainly use for trading. So if you are trading with FXPesa, you download the MetaTrader 5 trading application for your desktop. And if you prefer trading using a smartphone, then you download the Equity Trader by FXPesa. So for those who don't have an account, make sure to check the links in the description below. Register for a trading account. You get a free demo account, and you're able to practice with paper money before you go live. And if you have been practicing and now you have the skill, we have a current offer going on where we are providing 100% deposit bonus for first-time depositors, capped at $5,000. Meaning that if you deposit $1,000, you get $1,000 on top of that. So that being said, let's dive right into it. So this is the UK 100 index, and clearly you can see it had been consolidating for 3 straight days. And then today we eventually have a break. So for the last 3 days, it's safe to assume that this was the direction of the market. And as of this morning, the London Open, we have seen a break, and now we are testing a new all-time high. So from the daily time frame, you can see we have never traded there before. So clearly, the market is attempting to break above this, which likely means that we are potentially breaking into a new high, and this could as well be our chart of the day. So there are many other setups playing out today. If you look at the Nikkei 225 index, it managed to make a big jump on Monday on the political news. And since then, it has been stuck in this form of consolidation. So eventually, we'll get to see a break. That hasn't happened yet. So the best thing to do in such a scenario is to wait until the market gets out of this consolidation and participate when we get into a momentum play. So that might play out today, tomorrow, or even Friday. So let's just keep watching that. So USD JPY opened with a big gap to the upside on Monday. Tuesday kept going higher, and today, Wednesday, it's even pushing higher. So clearly, it's a very weak yen in the market, and other currencies are making big gains against the yen. So far, it seems likely that we are going to see a continuation of the bullish momentum. But as per now, you can see some form of consolidation playing out. So from early morning session, I would say in the Australia session, Sydney session, we had this bullish momentum. Then in the Japan session, that is a Tokyo session, it's more of a sideways momentum. And now as we enter London, we'll be watching to see if there's a breakout and continuation in USDN. So we don't have that yet, so we continue watching the chart. For the dollar Swiss franc, clearly a very strong break out of some form of consolidation that lasted an estimate of 10 days. And now we have had a break towards the upper side. So normally, book patterns suggest that this market would top at the top of the triangle here. So we already got there, and you can see that the market is now beginning to consolidate, struggling to maintain the momentum, which likely means that the strongest currency of the year, which has been the Swiss franc, could potentially push back to this particular triangle. So we should be watching for that playing out for the rest of the day. Good potential that we see the Swiss franc strengthening against the dollar. So the euro is also picking up against the USD after trading along this lower trend line for some good time. That is, I would say, for 5 straight days. It's a very strong bearish momentum. If you had to draw trend lines for euro USD on the upper side, you would be connecting a high with the next high, and every time you connect, you notice that this trend line would keep on changing. Notice from this high to the next, then from this high to the next, We follow this sequence, and the trend just kept on strengthening from this high to this high, and this basically showed a very strong trend in the dollar gaining against the euro. But now we are bouncing from the lower trend line. So from the forward chart, it was a key level support that the market had gotten to, and now we can see the strong bounce playing out. So good chance that we see the market retesting this area today as the euro reclaims some of its losses. So that's the expectation from my side for Euro USD, some form of relief and recovery. Remember, the euro has been a very strong pair since the year started. So just because we had a consecutive weakening against the USD doesn't mean that the euro is dead. It's coming back. So the pound has been the leader in recovering against the USD with early morning momentum sending us into a new low. But then notice how during the Tokyo session, the pound has recovered almost 100% of the losses. So of course, now if we breach this day's high, then we should be targeting the New York session's high. This was the highest price in pound USD as per yesterday in the New York session. So this could be an extension of the current momentum. So from the forward chart, you can see it's a pretty strong bounce from the H1 time frame. I think it's pretty clear that this is a very strong entry by buyers. So we could be seeing the market pushing even higher. So for USD, we are seeing a similar thingy, similar kind of momentum, where we had a big sell-off when the dollar was very strong. But now we are seeing symptoms or signs of buyers coming back. So perhaps even just a retest of this area, 0.65787. This was the prior low right here on Monday. So we could be seeing the market going for that. So as for our favorite pair, gold, which was basically trading sideways yesterday, but then past midnight, it shot up and kept going up. So if you go to the 15-minute chart, you notice that this was more of a sideways momentum yesterday. Even though we crossed the day on a high, today we opened with a big jump, a retest and continuation. And for the first time, we are seeing gold trading at above $4,000 an ounce. So as we have always mentioned since the year started, the pullbacks are a blessing. So when you get any form of pullbacks, then it's a strong consideration to be looking for more buys. So for now, it's at a high, and we're just getting into the London session. So we should be watching closely to see if there's any pullback, which allows for more bullish momentum trades. So silver is just testing a resistance area. It was unable to break for 2 days. The pullback was a blessing, and for the first time in most of our trading careers, we are seeing silver trading at 48.756 dollars per ounce. So unless you are trading in the year 2008, then you have probably never seen silver trade this high. So this means that we are likely to see an extension of the bullish momentum. So positions towards the upper side will make more sense once we breach this area in a clean way. So disclaimer for those who are new in trading, the pip value in silver is 5 times that of gold. So you have to be careful if you decide to trade silver. If you have never traded silver before, perhaps try it on a demo before exposing it to your live account. So for UK oil, we opened with a gap. The gap was right here. So market spent 2 days attempting to close the gap. So you can see yesterday's low and how far it went. Almost completely closing the gap, and now we continue seeing the bullish momentum here. So oil is bouncing from a low. This low this year was last seen here in the month of May, and every time we have traded below that $64.42 per barrel, we have mostly seen the market bounce strongly to the upside. So in this case, it's no exemption. So most likely we continue seeing a push. And for those who are observant of the chart, you can see some form of inverted head and shoulder pattern playing out. So if this was our neckline, then you would easily realize that this was more of a shoulder and this was more of another shoulder. And if this was our head, then the pattern is right there, which indicates potential strong reversal. So we are yet to see the market break the neckline. Once it breaks the neckline to the upside, then that's when you should be looking for bullish positions. That's if the market breaches the current level. So on the US equities side, big sell-off yesterday, as we have already discussed, and we have seen some of these stocks going down. But then, as of this morning, you can see the bullishness coming back. So notice how we are entering the London session with a strong bullish momentum. Of course, I expect this to continue for the rest of the day. So more bullish momentum, looking to get into new highs. So remember, yesterday was a new all-time high before the sell-off. And now you're seeing the buyers pushing even higher. And that has been the story of the year. You can notice the small red candlesticks on the daily and how the market always pushes higher. So it's not different today. So the optimism on the Nasdaq is pretty good. You look at the Dow Jones, it's also trying to do the same thing, and SP 500 also pushing higher. So Bitcoin has been making all the news, where on Monday it hit a new all-time high of $126,214 per Bitcoin. Then we had a sell-off yesterday, and today we had been in this consolidation for some good time, and now we have breached that consolidation yet again, which means that now we pump towards a new high again. So the dollar index has been pretty bullish for most of the week, but right now we are seeing some signs of weakness. So in the past hour, the dollar index was a bit weak, and that's why we are seeing some changes in the euro, the pound, and many other currencies. So as for the Reserve Bank of New Zealand cutting rates by a jumbo 50 basis point, it sent the New Zealand USD pair tumbling down, but now we are seeing the New Zealand dollar try to reclaim some of the lost value. So while I mentioned the New Zealand dollar is not might not be the best pair if you're looking to trade the weakness in the New Zealand dollar, you can already see it coming back against the USD. So two currencies that are having similar challenges. So European equities, on the other hand, they've had a quite challenging time. With, for instance, if you look at the German DAX for the past 3 days, it's more of a sideways momentum. I wouldn't call this an overly bullish market. So on the daily, it's bullish. So if you go to the daily, it's a very bullish market. But then on a smaller time frame, say the 30 minutes chart, you can see that for the last 4 days is more of a sideways momentum. So unless we have a break, then that might give us an idea. So the EU 30 is also in a 4-day consolidation, and we will wait for a breakout. But then for the French market, and this is the one market that has been on the news, you notice that we had this 2-day consolidation. And out of this consolidation, as we enter the London market today, the London session today, there seems to be a break. So it's more like the market is taking the French political news positively. So the France 40 stock market index seems likely very bullish today. So we could be seeing a continuation. So the Swiss 20 index finally broke out of this resistance. So remember, this was before April 2 sell-off, where the market really dropped. Then we had a recovery within the same month, and this extended to May. And since May, we have been in a 5-month sideways momentum up until the last 3 days. So for the first time in 5 months, we are seeing the Swiss stock market index moving higher. So good chance that we see a continuation from here as the market paces to reclaim the highs we had seen before April 2 when Trump decided to slap everyone with tariffs. So for the Norway stock market index, always the odd one out. So while other stock market indices are making impressive recoveries, this one is retesting a key level support, trend line you have been watching here. So now, if you go to a smaller time frame, say the 1-hour chart, you can see that we are on a downswing headed here, and most likely we should be looking for opportunities on the bounce here if it actually plays out. So it's a patience game, wait and see how it plays out. So lastly, the Netherlands stock market index had a dip, and as we mentioned, a dip is a gift. So we got to this low, market dove right through it and then bounced immediately. And now from the 30 minutes chart, you can see there's a long tail towards the lower side, indicating rejection of lower prices. Then from the 1 hour time frame, some kind of setup that looks like almost like a morning star, which implies that buyers are coming right back, or basically some people are taking advantage of the dip. So as I mentioned, the yen weakness is best traded against a stronger currency. So pound yen seems like a likely candidate. You look at the price action from the gap on Monday to the movement on Monday, movement on Tuesday, and today, then it gives you confidence that this momentum could extend all the way to the resistance we had here, especially if you count the number of months that the pound yen has been stuck below this particular trend line. So good chance that we get to 207.77. And now the bullish momentum continues from here. So USD CAD, more of a sideways momentum asset. Nothing much is happening in this pair. Just noise, up, down, not a clear trend. So yes, we know that last week we had this cup and handle formation. This was the cup, this was the handle. Even the breakout didn't go for long, but it played out as expected. So that's it for the day. I would like to thank everyone for joining, for sharing the live session with other traders. So mostly we don't cover crosses. Once we cover the majors, this usually covers the crosses. We know that the crosses are derivatives. So once we cover pound USD and USD CAD, then it's more like we have covered the pound CAD. So the same case applies to all other crosses. So that's why we focus on the majors currencies. So I can see Lil Scooch tuned in from Nyeri. Thank you for joining. Good question. Daniel Kanja, what's your view on gold and Bitcoin? My view is very bullish for both assets. Though I'm a bit skewed towards Bitcoin, as I believe it represents a better form of money. So in this case, I expect more bullish momentum from Bitcoin compared to gold. Gold, yes, it may have its 50% plus return since the year started, but Bitcoin doesn't need 8 months to make 50% gains. For Bitcoin, even a 1 month pump is enough to do gold performance. Where is gold going next? I don't know, but there's just too much uncertainty in the markets, which likely means we see more bullish momentum. So with Trump tariffs, government shutdown, the still war happening in Russia versus Ukraine, stocks are at new all-time highs, and labor markets are softening, meaning that there is less and less people working in industries, especially in the US. The Eurozone is not left behind. There is a rising unemployment. But then this doesn't explain why gold stocks, Bitcoin are all near or at all-time highs. So this basically displays some underlying risks in the market. And with mortgage rates still at record highs, then there's a good chance that people will stick to the one asset they think it's safe. So more likely we see more bullish momentum in gold. So central banks are also still buying gold heavily. So I believe that bullish momentum might continue. So that being said, trying to see if there's any question I may have missed. Do you think we're in a bubble? Yes, a pretty big fiat bubble. Bubbles is not something we fear. It's things that we ride as traders. So if we happen to see a market in a bubble, it might continue being unreasonable, but you trade in that unreasonableness, if there's such a word. So lastly, I want to introduce you to something happening on the bullish banter. Yeah. So 4 days ago, we published yet another episode of the Bullish Banter podcast. We get to dive deeper on what's really happening in the markets. So for this question, do you think we're in a bubble? I believe we addressed it on this particular podcast episode. And also, there's someone who asked me what's my view on Bitcoin and gold. So this,
in terms of developing.
where we hosted Jason, basically covers it. Why Bitcoin outshines gold, fiat, and other cryptos. And our guest is very well adversed with these matters. So also, if you want a Q3 market trap, we also covered this, looking at Bitcoin, gold, oil, and Fed cuts. So all these are topics that we tend to dive deeper, take our time, and once you join in, hopefully you get to benefit from the information. That's it for the day. Thank you very much, everyone. Remember to like, retweet, and subscribe to the channel. If you're watching this on X, like and retweet will go a long way. So thank you very much, everyone. Enjoy the rest of your day and have a peaceful day.